Hello and welcome back to another week of your Mortgage Market Movers Weekly, where we are detailing everything that's going on in the macroeconomy to help you make better home buying decisions. This week's 30-year fix is at a yearly low. It is sitting at 6.09, and the last time it was around in this area was it wasn't even last year. I believe it was 2024 in September. So rates have been coming down. Definitely a great time to look into purchasing a home or refinancing a home with a higher interest rate. Not a ton on the economic calendar for this week, but there is some information that we're going to want to take a look at. But next week really has some more important information, and we're going to get into all that when we get into the charts. So without further ado, let's get into the charts. So we had a little threat of the US 10-year getting up above this 4.2 zone, and that happened right here. That was, mid-January. And since then, the US 10-year has come down. I think, so recently there was an inflation print. There was a CPI, and CPI was a lot better than expected. So I think the labor reports that came out weren't as solid. We'll take a look at those. But yeah, like I said, I really think that looking at inflation is going to be probably a better tool for gauging how this US 10-year will be doing, and we are down below 4.2 to 4.085 as of today. So really hoping to stay below that 4.2, and if we do, I think that mortgage rates will trend downwards for the foreseeable future. All right. So as we can see, the bond market has really picked up. I mean, a lot, starting at the beginning of February to mid-February. Definitely has, a lot of buyers have stepped up, and that's what's helping to push this 10-year yield down. So let's see, back over to the economic calendar. Let's see. This is last week, and we had this non-farm employment change. So it looks like 130,000 jobs were added when an expected 66. I think that this gets revised down by 60K, I believe, according to the Fed. That's what Powell said. But even so, I mean, that's just a crazy beat of the forecast and the previous. So labor market seems like, people... I don't know. That's kind of a crazy number, but yeah, it seems like labor market is staying intact. And then when we got to, unemployment claims at 227, previously at 232, forecast 222, so a little bit over that. Existing home sales, that came down a little bit last week on Thursday. And then mortgage delinquencies at a 4.26%. And that is the percentage of mortgage, MBA represented mortgages which were at least one payment late. Okay, so let's see. Okay, gotcha. So, yeah, I mean, let's see. So people are making late payments on their mortgages, not great, and definitely more than previously. So that might be something to keep an eye on. But CPI came in, it came in at a beat. So with labor doing well and inflation seemingly coming down, the Fed, they're in a decent spot right now. They don't necessarily have to cut rates, but, inflation it's really been the big thing. And, even when we're talking about rate cuts, we don't really care about Fed rate cuts as much as we do about this inflation information, in my opinion. So I think that this is what's helping the 10-year come down. This week we had, these are old numbers. I think this is from November. Yeah, so this is old. Housing starts and building permits. These are real old. So we're not even going to really look at that stuff because it doesn't matter. Let's see. FOMC meeting minutes. This could impact the bond market. Definitely seeing how they are thinking about the current situation and reading, some of the details in this document could definitely impact that. Let's see. We also have unemployment claims Thursday, February 19th. Manufacturing is interesting to look at, but I don't think it's going to impact, us too much. Pending home sales, this is good to look at. Thursday, 10 a.m. Let's see, what else do we have? PCE. That'll be definitely good to look at. So PCE, that's going to be an inflation read. So keeping our eye on that. Let's see. Flash manufacturing, PMI, and flash services, that can move the market. But, as far as the bond market goes, I don't know if it's going to be that big of a deal. But keeping an eye on these new home. Oh, well, this is November data again. Okay. So keeping an eye on these new home sales at 10 a.m. on Friday is important. But next week, we have PPI. And this is another side of the inflation equation. So that's going to be interesting to look at for sure. And being able to see how's inflation from the producer side of things. Okay, we already have consumer side of things. Let's see if producer side of things is coming down as well. I feel like that's probably going to be the big things for next week. So that's going to be the main things to keep an eye on. Like I said, 6.09. Well, I guess we had a 6.06 in January. But outside of that, last time it was around here was 2024. So rates are seemingly coming down. Yeah. Good time to refinance or purchase. Let's see. Probabilities of a Fed rate cut. Looks like still pricing in 2 rate cuts for this year. So we're just going to have to see if this changes. Like I said, I feel like we shouldn't get too hung up on the Fed cutting rates. Everyone always gets hung up on that. And like we always say, that doesn't matter as much. What really matters, in my opinion, is going to be inflation. And that's all I got for you this week. So if anyone has any comments, questions, concerns, reach out to us at www.mortgagesbylenda.com or via telephone at 877-TEAM-MBL. Have a great week, everybody. Bye.